Also es freut mich sehr, wieder hier in München, Bayern zu sein. Ich war Student an der LMU in den 70er Jahren, wo ich zuerst Physik und dann später sowjetische Volkswirtschaft studierte. Ja, sowjetische Volkswirtschaft. Das mache ich jetzt nicht mehr, so ich bin eigentlich bei der Maschinenbaufakultät an Stanford. Und heute werde ich so über das neue Gesicht von Globalisierung sprechen, aber ich mache das hauptsächlich auch auf Hochkalifornianisch. Das heißt Englisch, okay? Damit die Dolmetscher, ist keine Panik, okay? Weil niemand da drin Hochkalifornianisch kann. Das garantiere ich Ihnen. So, thank you very much. How much is this company worth? So this is an Estonian startup called Starship Technologies that is putting small autonomous urban delivery robots in cities around the world. They deliver pizza, they deliver packages. How much is this company worth, and what is the most valuable part of this company? So the traditional approach to valuing companies, the answer might be, well, the most valuable part of the company is the robot. This is what the company value is based on. That's actually not true. Is this a hardware company? Or is it a hybrid company? Or is it a software and data company? Is the value based mostly around the hardware or the software and data? Well, the answer is around the software and data. And so we're now seeing a complete shift in the sources of value from hardware to software and data, which is fundamentally what Digitalisierung is about. And it's also changing the face of globalization, of Globalisierung. Where data becomes the primary source of value, consumer data, but also other types of data, maschinelle Daten, for example. This is the foundation of much of the digital economy today around the world. And in the case of the robot, not just consumer data, but also the images of the sidewalks and the streets and the houses, so the urban infrastructure and mapping data, that's also extremely valuable. And so this is how this startup company is assessed in terms of what is the value of this company to investors, for companies that may wish to acquire this, for example. The old models of globalization were this came from a very different time in our world economy, where it was principally around manufacturing and transshipment of goods. And so the question I'm asking is, do we need to update our models of globalization to include the profound advances in information technology and advances and changes in the digital economy around the world over the last 15, 20 years? The new face of globalization really includes data, software-based services, and an increasing competition for talent in software, in product design, management talent, product managers, but also founders, for example, artificial intelligence scientists. And so this is the new battleground, the competition for top talent, but also the competition between different cultural and legal regimes around data. You know, the approach to personal data, sharing personal data, is quite different in the United States and China from Europe, which we're seeing. And we're seeing these effects very clearly in Silicon Valley right now. This is really a big shift and change and debate that's happening in the global technology industry, is how do we approach these different cultural attitudes towards use and sharing of consumer data. So what I'm going to do is to give you a short view of one of the fundamental changes, what is flipping in the world economy today, and how the valuation of companies, first around data and software, is fundamentally changing how we approach innovation and who really has the advantage in innovation and who is disadvantaged in innovation. So this is a chart from a German economist which shows the changes in company value, so the top 10 companies between 1998 and 2018. In 1998, the most valuable companies, so this is Börsenwert, this is stock market value, okay, of the entire company. The most valuable company was Microsoft at 272 billion, followed by traditional manufacturing companies, General Electric, but also oil and gas companies. And then at the bottom you have IBM, so a computer manufacturer, and in between maybe a chip company and pharma. 10 years later, we see the oil and gas companies at the top, followed by one manufacturing company. Microsoft has moved down a bit. Again, it's the only really software data company. But 10 years later, in 2018, the situation has completely changed, where you see the top companies being a collection of the 7, 8 top American and Chinese IT platform companies, primarily focused around consumer data, but also around enterprise data. And then you have at the bottom a bank, oil and gas. So my question is, what happened to the European companies? What happened to the traditional manufacturers? Even the top American manufacturers are no longer the most valuable companies in the world that they once were. So what we're seeing today is a growing gap in the value of companies, in the valuation of enterprises between leading European and US and Chinese companies. We're seeing a growing gap in market value between the new emerging IT platform companies. So just last week, Amazon passed $1 trillion in market value. Earlier this year, just 2 months ago, Apple passed $1 trillion. So we have 2 companies now above $1 trillion. The leading Chinese companies, Alibaba, are around $400, $500 billion in market value. Here is a diagram from The Economist of 2-3 years ago, which show, so these numbers are old, but they show the general differences between the company valuations of the leading American IT companies. Apple at that time was around $650 billion. And then for comparison purposes, below you have the leading German manufacturing companies, Daimler, Siemens, BMW from the automotive industry, where every single one of them is below $100 billion. What's happened since 2015 is that this gap has increased. And the question is, why is it important? Because in the traditional family ownership model, where the family keeps the company, does company value matter? Is it relevant? And in my discussions with senior policymakers at the European Commission, some of them have told me that Börsenwert is total irrelevant. Now, in the family ownership economy, that may be true, but things are changing. So let's look at some of the most valuable companies in Europe today. Now, keep in mind that Amazon and Apple passed $1 trillion in market value just a few months ago. This is Europe's most valuable company, SAP. And here you see in the red box, this is from yesterday. Current market value, 126 billion euros. It's Europe's most valuable company. Siemens, red box, $92 billion, euros. VW, 73 billion. Daimler, 59. BMW, 53 billion. So what's happening is the value of these US and Chinese companies, the market value continues to go up, is that much of European industry is stagnating or even declining relatively in market value. So the question is, now und? Why? So what? Why is this important? Why does this matter? Well, equity value and shares are an increasingly important part of currency, of the way companies buy innovation through mergers and acquisitions. Buying of companies, primarily startup companies, but also mature companies, is increasingly an important part of the global, American, and European landscape. It's how established companies, it's not the only way, but it's one important way of how established companies can stay at the cutting edge of innovation is by bringing in new young teams into the established organization. So high enterprise market value can be extremely important in some areas for acquiring top talent, technical and management talent, and for acquiring leading new startups and technologies in many markets and industries. Just to give you some examples. So these are a number of the top Silicon Valley companies: Twitter, LinkedIn, Facebook. And this chart shows, in the case of Twitter at the very top, the percentage of revenue that was given in stock options. So the option to own shares of Twitter to new employees and existing employees in 2015. And in the case of Twitter, it was over 30% of revenues was given to employees and new employees in the form of equity shares to attract new employees, but also to keep them. It's a very important part of the compensation package of the top IT companies. LinkedIn is now owned by by Microsoft, Facebook, Salesforce. So this is a very important part of how you attract and compensate talent now, the equity and the shares. And when you have Familienunternehmen here competing for top KI-Wissenschaftler, artificial intelligence scientists, competing against Google, Facebook, Microsoft, who can offer very high levels of compensation, both cash and in shares, this has a direct effect on the ability of your companies here in Bayern and in Germany and Europe to attract the top IT, software, data, artificial intelligence talent. So these issues have a direct impact. Just to show you compensation at some of the top US and more traditional companies. So Facebook, combination of cash and stock. This is average compensation, median employee compensation, almost $250,000 per employee. How do German companies compete against this? Especially when in many German companies today, through Arbeitsverträge, the ability of German companies to raise salaries for software programmers and IT people is very, very limited. How do they compete when the top global IT companies out of the United States and China can offer this kinds of compensation? It's a very big challenge. And so the merger and acquisition of startup companies. So we talk about talent. Now let's talk about acquiring innovation, buying teams that have developed new products, buying the entire team. How does equity and shareholding affect companies' ability to bring in the most recent new startups into the company? And so M&A, mergers and acquisitions of startup companies, is growing in importance as a key source of innovation for established mature companies, including family-owned companies. So just to give you some examples, these are 5 top US IT companies which show the number of artificial intelligence startups they've acquired since 2012. You can see it's quite substantial. And big differences between the companies, but this is a regular, frequent practice for top US companies. And the way that these corporations in Silicon Valley pay for startups is in part by exchanging or selling equity, selling shares. Okay, many of these acquisitions do not come from cash flow. So this is an additional weapon in the toolbox for American IT companies to buy innovation, to bring it in-house. Mergers and acquisitions are an established part of the Western European economy. This just shows some of these are the number of transactions going currently up through the first quarter of 2018. So it is an established part of the European industry, mostly European companies acquiring other European companies. In the case of Germany, various well-established market for mergers and acquisitions, both Germans buying companies outside of Germany, as well as internally to Germany. These numbers are from 2016. And in many of the market segments in industrial technologies where Germany excels and has a leadership position. So automotive tech, for example, seeing a number of acquisitions. This shows basically who's acquiring who. The predominant trend here is that European companies are acquiring European companies, but more and more American companies are coming in here. For example, in the case of autonomous vehicle technologies, where you have US corporations, Intel, NVIDIA, Google, for example, Uber, buying German startups. Then you also have in Industry 4.0, mergers and acquisitions is also a very important part of staying current at the innovation edge. But in contrast to artificial intelligence, here you see German companies dominating the acquisition of new companies, for example. And then also in artificial intelligence, mergers and acquisitions is buying startups is huge. Many, many companies. You can see the growth in total number of AI startups. 2012 to 2017 is increasing also. So what are the sources of financing for M&A? Now this is a chart for Europe, and this is for 2017. And so here in Europe, the major financing source for acquisitions is from private equity companies, European private equity companies, followed by cash reserves, so cash flow eventually. Then you have loans, so banks, bank lending, family offices. Last, ganz winzig, is equity, selling shares. And that's because most European companies, one, they don't want to sell shares because they want to keep control of the company, but two, the shares do not have high value. Now, in the United States, in contrast, when you ask American executives, so who do acquisitions, what percentage of deals include stock, include shares as part of buying new companies? The most recent year, second half 2016, 33% of the deals include some portion of shares for buying new companies. So this is where the Börsenwert becomes extremely important for the ability of American, Chinese, German companies to stay at the top of innovation in their fields. And so now we're seeing a new face of globalization between the new haves and the new have-nots, based around strength in digital economy, digital technologies. Who has digital skills as a country, as a region? Who has the fastest digital infrastructure? Who's got AI, top AI scientists? Who has the top computer science faculties? Bavaria is very fortunate to have the top Informatik Fakultät in Germany. Extremely important for the future of Bavaria. And I hope we see other German Bundesländer investing in strengthening Informatik and Computerwissenschaften as well, and following the example of Bavaria. Who's got data and who doesn't? The Datenschutzregeln are problematisch. Now, in Silicon Valley, the major companies have been spending hundreds of millions of dollars becoming compliant with GDPR, which came into force on May 25th. What's happening now here is in Germany, is the artificial intelligence community is now pushing back against GDPR, and the government in policy discussions in Berlin saying we will not be able to build KI startups, artificial intelligence startups, if we can't have data. So there's a renegotiation now here in Germany taking place. You can't have an AI industry if you don't have data to work with. This is a fundamental contradiction, and this will have to be negotiated because the consumer laws, data protection laws are extremely important. They're good. So California enacted a new consumer data protection law 1 month ago, modeled in part after the European law. It's brand new in the United States. American companies didn't want this, but we've woken up. We say it's important to protect consumers, but how do you protect consumers and also build new artificial intelligence technologies and products? And so this is where the data issue becomes part of globalization and the new digital economy and the impact of the new Datenschutzregeln. So I don't have answers. This is an area which I don't think is receiving enough attention here in Europe, either in Brussels or Berlin, here in München. This issue of Börsenwert is extremely important. It's extremely strategic because you're potentially in danger of not being able to acquire the top new companies, because it will always be the Americans and Chinese who can pay more. Thank you very much.